Welcome to Informed Investor. In this video, we will take you through the initial public offering of EPACK Durable Limited, which opens for subscription today. Before we get into the details, let's understand the business model of the company. So EPACK Durable is an ODM, which means Original Design Manufacturer of room air conditioners, and has now expanded into the SDA market, which is small domestic appliances producing products like induction cookers, mixers, grinders, blenders, water dispensers, and more. These products are subsets of the larger consumer durables market. Basically, their customers are other Indian brands that are engaged in the consumer durables markets with the likes of Blue Star, Voltas, Havells, Godrej, Bajaj, Usha, to name a few customers. Additionally, it also manufactures components like heat exchanger, induction coil, PCBA, etc., which are actively used in the production of RACs and HDAs. Now, coming to the IPO details, the IPO opens for subscription today and closes on January 23rd, 2024. It has fixed the price band at 218 to 230 rupees per share. So for a retail investor, the minimum lot size would be 65 shares, translating to a minimum investment of 14,950 rupees. EPACK Durable plans to raise 640 crores from the public, out of which a majority or 62.5% of the issue would be a fresh issue of 400 crores, while the remaining 240 crores will be an offer for sale, which means the existing promoters and shareholders are selling off the shares. Post the IPO, the promoter shareholding will drop from 85.49% to 65.36%. The IPO has the following reservations: 30% for anchor investors, followed by 20% for qualified institutional buyers, 15% for non-institutional buyers, and lastly the retail quota of 35%. So what are the objectives of the issue? The primary reasons for the IPO are to raise funds towards funding capital expenditure for the expansion and setting up of new manufacturing facilities. Secondly, it is to repay certain outstanding loans of the company. And lastly, for general corporate purposes. As mentioned earlier, the company operates in the RAC or room air conditioner industry, as well as the small domestic appliances industry, which are subsets of the larger consumer durables markets. The Indian consumer durables market grew at a CAGR of 10.1% from fiscal year 2018 to fiscal year 2023. In the near term, the market is anticipated to experience growth accelerating, fueled by a rising rural consumption, a shorter replacement cycle, increased retail penetration, and the availability of numerous brands and products at various price points. The overall market size of consumer durables market for fiscal year 23 is estimated at 1,300 billion, and the market is expected to grow at a CAGR of 13.7% until fiscal year 2028. Now, coming to the financials, the company recorded a CAGR growth of 27.7% in terms of revenue from fiscal year 21 to fiscal year 23. In the 6 months ended in fiscal year 24, the company reported revenues of 616 crores. The company maintained gross margins at around 14%, which basically means that 14% of business revenue is left over after subtracting of direct costs such as labor and raw materials. The EBITDA margins remained around the 7% mark. When looked at the bottom line, the company reported profits of 31.9 crores in fiscal year 23 and made a mere 2.65 crores of profit in the first half of fiscal year 24. The ROC were healthy at around 10% levels from fiscal year 21 to fiscal year 23. Lastly, even the debt to equity ratio has considerably come down, indicating over the years as the company is strategically employing debt. An important point to note is that the company derives a major chunk of its revenue, about 75 to 80% of its revenue, from its top 5 customers. Another interesting fact is that the company has availed incentives under the PLI scheme, specifically under the PLI for white goods, which includes air conditioners and LED lights. EPACK Durables availed incentives of 15 crore in fiscal year 23 and 7.5 crore in the 6 months ended as on September 30, 2023. When looked at the valuation of the company as compared to its peers, based on the upper price band of Rs 230 per share, the price to earnings ratio of EPACK Durables trades at 43 times. The average industry PE stands at 74.4 times. Now moving to our last segment, which is the strength and weaknesses. Firstly, let's talk about the strengths. EPACK Durables was the second largest room air conditioner ODM or original design manufacturer in India in terms of the number of units in fiscal year 23. Secondly, it has advanced vertically and integrated manufacturing operations with a vast product portfolio. Being a key manufacturer in the fast-growing consumer durables market, it has long-standing relationships with established customers and good expansion chances too. Now talking about the weaknesses, it operates in a significantly competitive market that has high working capital requirements. Secondly, the pricing pressure from customers can have an impact on the company. Moreover, the company is subject to precise technical specifications and quality requirements. Having said that, this is me, Rahul signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com